Hey everybody, and thanks again for tuning in to another episode of Shop Talk with Zach. Over the course of the next couple weeks, we're going to be going over everything you need to know to start your small business. Now this week we're going to be covering whether you should start off as a sole proprietor or whether you should start off as a limited liability corporation. If you think that you need to start off as a corporation or as an S corporation, what you should probably do is stop watching this video now, Google a lawyer and Google an accountant and go talk to them. You shouldn't be getting your advice on that from somebody on the internet. All right, so first I'm going to talk about a sole proprietorship. That's what I have my business, Peacefield Welding, set up as. Now, there are a few advantages and a few disadvantages to being set up as a sole proprietor, but it fits what I do. So basically, as a sole proprietor, what you do is any income the business makes gets funneled through the business name and gets reported on your personal income tax return. So you don't have to file as a corporation, you just file as an individual. Now, this also has a few disadvantages. So if you are the type business that you need to go out and borrow a lot of money or you have to have a lot of employees, not the best fit there, because basically any business liabilities that you incur, so from payroll to buying that new truck that you need, all that also is personally, you are personally responsible for. There's no insulation between your personal assets and your business assets. Okay, so the main advantage of an LLC over a sole proprietor is that if you go out and borrow money in the name of the business, it is insulated from your personal assets. Say if I go out and I buy a new truck and I'm set up as an LLC, the business owns that and the business owns the debt for that. So if the business fails, my personal assets are not on the line there. Whereas in a sole proprietor, if you go out and borrow money, it's you as an individual going out and borrowing that money. Also, the same goes for employees where, if you owe them payroll, if it's your personal, if you're a sole proprietor and you're doing it, it's you personally, versus if you are, set up as an LLC, it's the business doing it. Now, if you are set up as an LLC, you have to file a corporate tax return and it gets a little more complicated with that. So that's a whole other thing there that you should probably research. But basically, if it's going to be you in a small business like that where you either have a family member helping you or you have maybe like one helper, sole proprietor is a pretty good option there. I can only tell you how this process works in Indiana. However, in Indiana, it's really difficult to set up your sole proprietorship, or also called a assumed business name. You have to get in your car. You have to drive to the county courthouse in the county in which you reside or your business resides. You have to walk in, you have to walk to the recorder's office, and you have to give them $20, and then you have to fill out a one-page form. They stamp it. Congratulations, you have your assumed business name. You are now a sole proprietor. That's all it takes. Very simple. You want to go set up a bank account, you drive to the bank with that piece of paper, you hand it to them, and you hand them your driver's license. That's all it takes. Now, if you want to set up an LLC or a limited liability corporation, you don't even have to leave your house in Indiana. You get on your computer, you go to the Secretary of State's website, you fill out a couple papers, you give them, I think it's $75, you hit send, they send you the paperwork. Congratulations, you're an LLC. That's all it takes. There's no, long drawn out paperwork, none of that. It's real simple. Your state may vary, however, in Indiana, it is really simple. All right, congratulations, you now have your assumed business name or you have your LLC. What's the next step? Well, in Indiana, there's two steps that I would encourage you to take. You need to set up a bank account in the name of the business. That's a no-brainer. You go to the bank with your little paper either saying you've got your LLC or your sole proprietorship there. You hand them that, you hand them your driver's license, you fill out the paperwork, and you're done. Now, the other thing I would suggest you do is you would set up a retail merchant certificate is what it's called here, but basically it's the certificate where you can pay your state sales tax and report to the state how much in sales your business did. In Indiana, it's called, again, the retail merchant certificate. Also, this lets you purchase from other businesses without paying sales tax, which is, if you are, say, buying a commodity, working on that commodity, and then selling an end product, this basically means you can sell that original raw good without having to pay sales tax on it. So if I go to Alro and buy a bunch of steel, I don't have to pay sales tax on it twice. If I buy steel from them and then go ahead and build a product and sell that product. I don't have to pay sales tax on it there. So that's how that works. All right, depending on where you live, there may be other things that I did not cover here that you need to do. Where I live, you know, in the county, outside of any incorporated town or city, it's real simple. There's very little that you actually have to do. If you are, say, an electrician or a plumber or something along those lines, you may have some additional, you know, licensing or registration you have to do with the city, county, or state. But really, it's not that hard. If you just want to set up a machine shop like this in your garage, there's really not a whole lot that you need to do. If you're in town, you know, you might have to deal with your homeowners association or something along those lines if you want to run a business in your garage. I'm not going to tell you what to do there, but you know, hey, just, you know, keep it on the down low would be my suggestion. All right, so once you have your LLC or you have your sole proprietor, there's a few things that I would recommend you doing. The first thing I would suggest you do in both cases is to set up a bank account in the name of the business. That way you can take a check that is made out to the business name. It just makes you look a little less shady when you're dealing with a customer. Also, in both cases there, I would suggest either you set up either a QuickBooks account, or I personally use Wave. It's like a free accounting program that lets you track all your expenses, all of your, you know, all your invoices, and also lets you take a credit card, which, you know, is really important nowadays because everybody uses a card. I don't even remember the last time I wrote a check. Also, I would suggest if you are a sole proprietor, you set up a separate credit card to where you can solely use it for the business. This makes it a lot easier when you're doing your accounting to track what actually is spent on the business, because anything that you spend on the business comes off the top for the business. And it's really important to keep really good track of what you're spending there. Also, if you have the option there, I would suggest finding a credit card that has pretty good rewards. Personally, I think I spent last year on the business card. I got about 3% back, and since I pay the card off at the end of every month there, didn't have to pay anything for it, and so I got 3% of that sum back. And it's a really nice way where, you know, the wife and I can go out and we can use that as our, you know, date money or vacation money. And basically it's just free money that you're already going to spend. Why not make it work for you? All right, I hope you enjoyed this video. I want to summarize real quick here. If you're borrowing money and if you are having a lot of employees, your best option is to go for an LLC. If you're keeping it small and not borrowing money, I would suggest sticking with a sole proprietor. Pay off your credit card at the end of the month and just use the rewards to do something fun. Have a life outside of your business. Like, it's real easy to just kind of get buried in the weeds and forget that everything else exists. Spend some time with your friends and family, and, you know, remember what life is really about. And it's not about growing your business. It's just about enjoying the journey. I'm Darlington Farm. If you want to see more videos like this, please hit that subscribe button. Please hit the, you know, little bell down there that lets you know when I pop up with a new video. If you have any further questions, if you want to cover anything else in depth, please just leave it in the comments down there. Once we get through kind of the basics of getting your business started here, I'm going to try and get some shop tours with some other people lined up. We're going to go over, you know, buying used machine tools, buying used welders, things like that. Anything that I can, you know, show you guys that I've learned the hard way on that'll help you guys out, maybe save you some money down the road. That's what we're going to cover. So anyway, I'm Darlington Farm. Thank you for watching. Have a good week.